Welcome back to Raw Stocks. This is Rustic, and I'm going to be taking a look at Tesla's chart after today. Today was a CPI data drop. There was a lot of hype leading up to CPI, especially after that run-up we had on Monday. People were waiting for the numbers to come out. They did come out hot, which I don't know if we expected that or not. I kind of expected it, but regardless, we still had positive movement in the market. Eventually, we came back down and closed a little bit flat, but nevertheless, there were some nice moves in there. We had a run up out of the gate. We had a nice correction back down. Could have caught either of those. Made a nice little profit. Ultimately, again, we closed a little bit flat. So not too much excitement. Tomorrow we got PPI dropping. Could be another exciting day. We don't know what'll come. But let's just go ahead and dive into the charts and see where we're at. So like I said, day ended up kind of looking flat. You can see small candle body, gapped up from yesterday's close. We ran up, came back down. Actually ran down, came back up. Small candle. Doji, close higher than yesterday's high. Candle body high. Did not close above breakout candle. So what is that telling us? Where do we have to go from here? We have the previous day's high in. We have the previous week's high down here. We have the previous week's low. All right, we're still looking at these gaps. Let me go ahead and mark them out on the chart for you. So we're going to go candle bodies. We're going to look at gap open. We're going to look at gap close. Still haven't hit that mark yet. Tried to yesterday on the wick and got rejected. Today, ultimately, I think it was just a draw on liquidity. I'm going to go ahead and mark that out for you guys as well. I talked about yesterday in my video how wicks hold order flow. Sometimes there's orders to go short. Sometimes there's stop losses. It can be retail or institutional. A lot of times it's larger orders and institutional order flow that sits in those big wicks. So oftentimes what you see too is when you get a wick like that, price might want to move back into it so that those orders can get filled. And so that's what I think happened today, is that we saw price run back up into that wick. It's another chance for institutions and big money to get their orders filled if they're trying to go short. Also run on stops for people who are already in positions. So it's not very reassuring that we didn't get much movement today, again, with the CPI data being hot. I'm not sure that we expected we would, rally and rip higher. But where are we going from here? That's a big question. So, again, we have the liquidity that's built up in this blue zone here, in this wick. We could look at price coming back down. We still have this big fair value gap that opened up on this day, where we had a gap using yesterday's wick, and the wick on Friday creates the fair value gap. Talked about that fair value gap yesterday in depth and kind of what we want to see, right? So bull case scenario, we can come back down and test this, which we did not today. We did not even test yesterday's low. We can come back down into this fair value gap. We can come all the way down to the bottom of the fair value gap. We can even wick below it. If candle body stays above the close of the fair value gap, it stays open. We can come back down in here. We can still rip up. That doesn't mean that the bull case scenario is off the table just because we trade back down into this daily fair value gap. We certainly could inch higher, head higher. We could be looking at this gap open. We can be looking at this gap close. And then from there, we could even be taking out buy-side liquidity that sits in this candle, ultimately running up into supply. So that's a possibility for sure. We have OPEX options expiration on Friday. We have PPI tomorrow. So definitely the catalyst can be there to move the market in a big way. But again, bear case scenario could be coming back down to go back up. Could just be going straight up. Let's take a look at the RSI and see if the RSI is giving us any kind of indicator. I know that the last time I looked at it, it did look fairly strong. So, and it still looks that way. we got the control line, we got RSI, we're pointed in the upward direction. Certainly could pop up something like this. Boom, runs up, right? Price goes ripping. We could see that. We could also see it come back down, test the control line again like it did here, where we were in that bull flag coming out of last week. Come back down, test the control line again. Could head higher, could break below the control line. That all would bring us still down into the fair value gap, and it would still be bullish, right? We could still break that control line just a little bit and then still head higher. So bull case scenario, any of those things can happen, and we'll just have to watch and see where price wants to go, especially after the data drops tomorrow and the options expirations hit on Friday. Bear case scenario, we want to see this fair value gap taken out. Again, we're touching liquidity today. We can be taking some of that liquidity that's in that wick. We can head down. We can take out that fair value gap. If we head any lower than that, there's another fair value gap that's unmarked. I'll mark it for you guys. I talked about it in yesterday's video. It's fair value gap sitting right here. So we take out this fair value gap. We could take out this fair value gap. We could head down to this fair value gap, right? And then eventually we could head down to the previous month's low. That seems like a lot of downside. If that was the case and we started heading in that direction, we could see a potential head and shoulders setup. I'm going to go ahead and mark that off for you just so you could see what that would look like if it was going to hit, right? We got a low, we got a shoulder. Come back down, we got a head, come back down, right? Shoulder back in here to test, and then ultimately coming back down. Something like that, right? It could even head lower than that. It'll be zigging, it'll be zagging. It may not just drop straight off, but we could see something like that set up entirely if the bear case was to take into effect. By drawing a trend line with the RSI, you can also try to see if that gives us any indication of where price might be moving. So we're going to look at here. All right, so we had a breakout. So we could see price come down and retest that trend line and then continue to head higher from there. We can also look at RSI from the bottom. Kind of follows our signal line or our control line. So we could just see that inch up, which would just kind of progressively take us higher, even into the gap. And from there, at 70, it could reject. It could punch higher like it did here. We'll just have to wait and see what happens there. Like I said, I do think it's interesting that we are heading into this liquidity wick, and we'll just have to see what happens from there. I do have a couple different points of interest. I got an unbalanced daily price range down at 190, 196, which is on the chart, but of little importance at this point because we're so far away. But if we were to see this be a giant corrective move, comes down, comes back up, comes down, we could see it target something like 191. Not expecting it at this point, but we'll just have to see what happens. I do have a couple fib levels marked out for you guys. These are smart money concepts for optimal trade entry. You're looking at in between the 61.8, which is the golden pocket, up to the 705 or the 70.5% retracement. These are the levels I choose. These are the levels that I learned on as far as what optimal entry looks like. I know some people like the 50, some people like the 61.8, some people like higher than the 70. They'll call those the golden zone. I like the 75. It's right there in between, and it's optimal trade entry. So I do want to notice that this candle on Tuesday came up above optimal trade entry, rejected, closed below. Seems like a good spot to enter short. Again, we're testing that wick. We're testing liquidity. We're drawing on it. We're still in optimal trade entry. We still close below. We could definitely see this come back down as being a great place to short in this fib levels. So I have those fibs marked out for you. And we'll just have to see if it chooses to reject or if we want to punch higher. I do want to look at the chart on a little bit longer time frame. This is the daily chart, but I want to look at it. And I don't talk about Elliott waves a lot, but I do want to just reference it because I have been paying attention to see just where we might be in this situation. So if we were to consider Elliott wave theory, this is one potential. I don't trade Elliott wave, but I do watch Elliott wave, right? So we could be in a 5-wave structure, which is a bullish, in this case, a bullish wave structure where we got a 1, we got a 2. Oftentimes, if 2 is drawn out like this, 4, which is also a corrective wave, is usually much quicker. Or the other way around, if 2 ends up being very quick, coming down fast, and then running up into 3, oftentimes you'll see the 4 wave be something like this, where it kind of is longer and drawn out, a little bit more sideways, but still down, right? And then you get your 5. So 5 doesn't have to go above 3. It can, basically truncate and not hit above 3 and get rejected. Because we have supply here, you would anticipate it would come somewhere into the supply range if it did, and it certainly could go higher. There's nothing that says it can't. With Elliott wave, you're looking for 3 to be, most likely the longest and most aggressive wave. 5 can also sometimes be really good as well. So that's one option with the Elliott wave, that we go higher. 2 is that the other option, and I'm going to map that out for you as well, is that this is a giant corrective wave. And we're looking at something like an ABC pattern, right? And if that was the case, then we'd be looking at an additional ABC. Okay, and then ultimately, after that, you'd be looking for a 5-wave move up. This can be a 3-3-5 pattern. And so just things we're monitoring. Again, not trading Elliott wave, just looking for clues to where we are in a wave count that could potentially let us know where price wants to move. So let's go ahead and look at some shorter time frames to see if there's any other indicators. We'll go ahead and jump to the 1-hour chart. I oftentimes skip the 4-hour chart because a lot of times the 1-hour and 4-hour will kind of show very similar things. So we got a couple fair value gaps that happened between Monday and today, and we're keeping them open. Okay, this one that happened on Monday, again, we get the fair value gap from the gap up. We set another fair value gap that never closes, right? Candle bodies are above the low of this bullish fair value gap. I'm going to go ahead and take this one off because it's not extremely relevant right now. You have another fair value gap that was created here on today's open with the gap, and we tested it. We didn't even run really back down into it, and then we just held it all day. So those are going to have to break if we're going to look at this coming down to the downside. Again, bull case scenario is these stay open, and we'll see this push either further up into liquidity or start filling some of those gaps. We also have the 1-hour order block, which sits below the supply zone, and that order block's coming off that high at 299.47. So it's this block here. We do have a fair value gap that's in that order block that would be potentially a point of resistance. If we were to head higher, closing these gaps, we could look for price to reject that fair value gap, come back down, ultimately probably heading back up into supply. So again, if we were to head higher, that would be the scenario. If we're heading lower, we might close these fair value gaps here. If we gap down, we could totally gap that fair value gap, head back in to test Monday's breakout. So we'll just have to, again, see what PPI brings, see where price wants to go from there. But bear case scenarios, we're just targeting all the bullish indicators that happened in the last couple weeks. Let's drop down to the 15-minute chart, which often can start to give us some break of structures, change of characters that might be of interest to us. We do have this giant break of structure right here that has not been tested yet. That's going to sit inside a bullish fair value gap on the daily chart. Let's go ahead and lay that level out. I do believe I talked about it in yesterday's video, but we'll say it's the 15-minute. unbalanced price range. Okay, so we do want to see price come back down to this at some point. I do anticipate that if we do want to run higher, we might see that come down. Like I said, it's going to put us inside that fair value gap that's on the daily chart. Come back down, balance the 15-minute price range, balance this break of structure, could even test that gap, still running higher. Order block here, 15-minute, so we could come back down, we could see that tested. It's not off the table. We have options expiration, we have PPI. If it gets moving in the downward direction, we're looking at 258 being an area of interest. We're looking even down to the 240s, mid 240s, if it wants to get down there. And then even at that point, it could certainly go higher after that. So a lot's going to ride on the options expiration and the PPI data. These are balanced price ranges here. You can see we had a break of structure. We came below it. We tested it. We kind of gapped it, but we tested it. We chopped around. So this is all balanced price here. These price ranges have been balanced, with this change of character is balanced here. This change of character right here gets balanced. This change of character technically is balanced by the gap because we moved over it. So not likely that we need to test this range to balance price. But again, order block down here. Last kind of bearish swing order block or bullish swing order block, I'm sorry. So if we wanted to get down there, we certainly could. Max pain right now supports us falling much lower. So we'll see if market makers want to hit max pain or not. Drop down to the 5-minute chart, see if there's anything else. We got the 15-minute balanced price range. We do have a little fair value gap here. 260s, mid 260s. So we could see that happen. Again, kind of reiterating this fair value gap that you saw on the 15-minute chart, also present on the 5-minute chart. If you draw it out, we tested it a little bit. We kept it open. We also have another fair value gap that's inside this giant fair value gap. If you were to extend it across with the top, we just barely tested it twice. A couple things I want to note that I do find interesting on this lower time frame chart is that we have relative equal lows right here. So the theory on relative equal lows or relative equal highs is that they will eventually get taken. And so even if price wants to run up further, it's likely that we see these equal lows get tested before we head any higher. And those equal lows are right around 270. So I'd say good chance that before we head much higher, we see at least these equal lows taken. Potentially, we got a lot of liquidity built up here. So if price wanted to move higher, we could see, again, on a short-term time frame. So this would be like quick, probably quick and dirty. We got a liquidity buildup in this candle. So you mark that, right? We're in liquidity on the buy side. On the sell side on the short time frame, we got equal lows. We got liquidity buildup in this wick. We still got a fair value gap. Price could certainly come down, test these equal lows, come down into the liquidity built up in the wick, still keeping the fair value gap open, not closing it, could run up even further than that. So there are upside, there are downside targets. I want you guys to just be aware of that. Try to take a neutral stance here because there are targets on both sides that are of interest. And so PPI and options expirations are going to weigh heavy on what happens. And from what I've witnessed before, options expirations can definitely be some manipulation where long-term contracts have been held, sometimes as hedges. Price can be pinned in a certain area just through options expiration, and then we see a huge move the next week. We also saw a huge move, not that it was options expiration, but on Monday we saw that giant gap over here. And so that could be positioning or repositioning based on, you know, what contracts are being held, what contracts are needing to be exited by the end of the week, and repositioning for potentially the next quarter. So thank you guys for listening. I hope this is beneficial. Go ahead and drop a like, subscribe, comment on where you think we're going. Let me know what you guys think PPI, how the PPI data is going to release. You know, we had the hot data today on CPI. sometimes in the past you see a run up on CPI, you see a drop on PPI. Just some more market manipulation going on. So leave a comment. I'll try to get the time to respond to your comment. And again, I really appreciate your guys' support. I'll see you tomorrow.